This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, as always, my colleagues Sonia and Nigel. Guys, hi, good morning.
Good morning.
Welcome to a new four-day week, right? As Nigel reminded us, last Friday, was it?
Yes. The best thing about the week.
Thursday, right?
Thursday is the
Need to pull
holiday,
through three, then you get a bit of a break and come back to the
and
finale.
then finish it off, right?
And it's the last week before the budget, so if that pre-budget rally is something that people are expecting, perhaps it could play out, given that we have such positive triggers today.
I mean, we have the market in the US turned around brilliantly, right? And we were talking about this actually on closing bell on Friday and on the editors' roundtable as well, that the US is basically at a very critical juncture. The trend line all the way from the Jan 21 highs has held. And every time the market has tried to bounce back to those levels, which is roughly around 4,000 on the S&P 500, it's sold off 10-15%. Thursday looked pretty ominous. And Friday, we've attempted a very smart pullback. The changes on your screen, the S&P up about 1.9, the NASDAQ up about 2.6%. So these are big rallies. And this was accompanied, mind you, with yields going up. I mean, the 10-year, for example, in the US on Friday, the 10-year yield was up 10 basis points. Okay, what led to this? Let's just quickly put this up. There were two comments from Fed officials, senior Fed officials, which was very clear and explicitly dovish. So there was a gentleman called Mr. Waller who said that the Fed policy, monetary policy, and I quote, is pretty close to sufficiently restrictive at this time. What do you read from that? I mean, he, of course, prefaced this by saying that I support 25 in February. So yes, 25. But then he said it's pretty sufficiently, it's where we want it to be. So not very much upside from here. Then you had Kansas Fed's George who said, Fed will be more patient at this time to see if inflation remains on the right trend. So for the first time, and I think you had one more comment from another Fed official the week before. For the first time, you've got a lot of senior Fed officials coming in and saying that inflation is on the right track. And maybe the policy it's at a place where we can kind of put it on hold and see if this is sufficient or not. By the way, the FOMC has gone into a silent period starting Friday. So you won't hear from Fed officials anymore all the way till the policy itself. Now, let's come to some of the cues here in India. You had three big numbers which came through, Reliance, ICICI Bank and Kotak, and we'll discuss all of these in detail. ICICI sort of hit it out of the park, very strong numbers, but that has been true for so many quarters now. Kotak Bank, I think, is the more interesting one because the stock has underperformed so much and the numbers were very solid. Growth is starting to make a bit of a comeback in Kotak, and that's also something we'll discuss. And Reliance has also posted a pretty decent set as far as the third quarter is concerned. So you're coming into the session with strong global cues and you're coming in with stronger earnings as well. And this matters because, last week it was more disappointing than surprising on the upside, with most consumer companies seeing earnings downgrades. You will not see those with banking numbers, and I think you don't see that with Reliance as well. Where did the Nifty leave off on Friday? It was exactly almost at the 20-day moving average, which is at 18,043. The market left off at 18,027. On the way up just a few levels, 18,184 is the level to cross for more upside. So it's not very far from here. You get a decent bounce. You get to somewhere close to vicinity of that. On the way down, it's the same range levels that we've been highlighting. 17,853. Is the first level, which was the swing low last week, and then the big low, which is 17,761, which is, basically the low which was made right after December. So those are the two levels on the downside. Bank Nifty did better as compared to the Nifty on Friday. Nifty was down 80 points. Bank Nifty actually ended up about 0.4%. It closed in the green. The 20-day for the Bank Nifty stands at 42,596. We closed at 42,506. So that's exactly, you're going to take that out on the way up as we open. But the point is a decent close above the 20-day, I think, is the first basic requirement before we can project levels higher. On the way down, I think the reversal level for the Bank Nifty stands at 41,861. That's a quick setup. I think you're starting with more positive more sort of macro-ish positive cues, and of course, some of the local factors, which is earnings-related cues, are also pretty good. Guys, hi.
Absolutely. Hi, morning. And the interesting part is that the market has now moved to the higher end of the trading range, right?
Yeah.
So does it break it on the upside? These are the way the cues are stacked up. It looks like we could. Now, it's the second straight week that the markets have gained. And for me, the most important cues are the earnings. And all three earnings, as Prashant was also pointing out, Kotak, ICICI and Reliance hit it out of the park this time. In fact, across all parameters, whether it's net interest margins for ICICI Bank at an all-time high, gross NPAs, asset quality, very strong, gross NPAs at a multi-year low. Across the board, brokerages, a lot of them have raised their target prices as well. Reliance, it was the O2C business that drove an earnings beat. And these three constituents put together could make sure that the market has a very strong start. At least that's what the SGX Nifty is indicating. The global handover was also very strong. Third straight week of gains for the Nasdaq. Of course, there was selling pressure that came in from the FIs on Friday. So the big question is this, could the markets break the upper end of the trading range? The trading range so far has been 17,800 to 18,200, and now we are almost at the upper end of that range. So are these cues enough for the market to break above it? At least the morning will be quite solid. Now, through the course of the week, you have many important earnings, so we're going to continue talking about that. Today, there's Axis Bank, so will it, take the sort of legacy forward after very strong numbers from ICICI and Kotak? Time will tell. Through the course of the week, a lot of auto numbers coming out as well. Maruti, Bajaj Auto, Tata Motors, etc. So we'll keep our eye out on that. But looks like the bulls have reclaimed ground and are sort of tightening their grip a bit on the market.
Well, it's going to be a little tricky, Sonia, this morning because the SGX Nifty is suggesting such a big gap up, and we know that we're going to be opening up more in that congestion zone. So run you through a few cues. The institutional flows, well, they're not very encouraging. On Friday, in fact, it was the worst in comparison to the full week. So the FIs, they sold 2,000 crores. The institutions, net institutions, that's the DI and the FI put together, was 500 crores odd. That was, probably the worst flows that we saw in the entire of the week. For 4 days, it was pretty good. Then, in fact, they gave it away. What did the FIs do in the F&O market? Well, they added long positions. Now, in fact, they added close to around 10,000 long contracts, and the long positioning has moved to around 53%. I would prefer shorts in the system, but that's, in fact, what the FIs have done. On the call side, well, they're writing calls very, very aggressively. 2.5 lakh, call contracts were written, and there were 2 calls for 1 put. So maybe, in fact, these call writers, they still believe now that 18,250 is going to hold out. Let's run you through a couple of options then. The 18,100 call, very, very active. 18,200 call, very, very active. And there was a sense that you saw writing at both these 2 strikes, which brings us to the level. It perfectly ties in with what we are looking at. In the past week, the 18,150 to 18,200, we visited that range, 3 out of the 5 days. And from there, in fact, we did see some sellers. Just pull up the highs, of the last few days. Those are the highs that we saw in the past week. And we ended closer to around the 18,000 odd mark. So we're likely to open up in this congestion zone. Getting past this is going to be very, very important. On the downside, a couple of levels you're looking at. Yes, we're going to gap up, but on a closing basis, irrespective of what happens during the course of the day, you want to defend that 20 DMA, 18,045 watt. If you break that, then you slide further to around the 100 DMA. I'm not talking about the 50 DMA, that's around 18,300, 18,250 to around 18,300 odd. So the SGX Nifty is suggesting a gap up. The advice would be, don't chase this gap up of around 100 points odd, because we're starting in the congestion zone. If you want to buy, well, then you should be, looking at that 18,000, 18,040 odd. That's a crucial support zone. If that holds out, maybe you're good for more. But for starters, don't chase this gap up opening.
Okay, well, let's see how it plays out. For now, the start is expected to be very strong. We have lots of opinion coming through this morning, so let's get straight to that. Surendra Goyal of Citi says the near-term volatility in equities around the union budget has overall been on a declining trajectory in recent years post the GST implementation. He says recent negative reactions post the budget are owed to imposition of new cesses or surcharges or changes to capital gains tax regime. In that context, rationalization of the LTCG regime to raise tax rates, increase or ease eligibility duration might have a negative impact. More medium-term, earnings downgrades or a slowdown in domestic flows and continued shift to other emerging markets are key downside risks, while a global soft landing in 2023 can support. He says they recently upgraded consumer staples and metals to neutral in their sectoral preferences.
Well, let's get you some money market views as well. This is B. Prashant of ICICI Bank, who says the dollar remained weak on the back of weak economic data. from the US, but the rupee has underperformed with appreciation limited by RBI interventions. For the week, Prasanna expects the rupee to trade with an appreciation bias and in the range of between 80.7 to 81.5 against the dollar.
Okay, and on the bonds, B. Prasanna says that the global yields continue to soften amid speculation that the Fed is likely to end the tightening cycle sooner than later. However, domestic bonds remain under pressure owing to upcoming fiscal budget and hawkish central bank rhetoric around inflation. Prasanna expects bonds to likely remain range-bound going into the event, that is the budget. He expects the 10-year benchmark yield to trade between 7.25 to 7.40%.
Okay, Rajat Bhattacharya, a senior investment strategist at Standard Chartered, he joins us now to take